Asian share markets and Wall Street stock futures fell on Monday after immigration curbs introduced by U.S. President Donald Trump heightened concerns about the impact of the new administration's policies on trade and the economy. European markets were also poised for a sluggish start, with financial spreadbetter CMC Markets expecting Germany's DAX to start the day 0.3% lower, Britain's FTSE 100 to open down 0.4%, and France's CAC 40 to fall 0.5%. The U.S. president on Friday puts a 120-day hold on allowing refugees into the country, an indefinite ban on refugees from Syria and a 90-day bar on citizens from Iran, Iraq, Libya, Somalia, Sudan, Syria and Yemen. The executive order led to huge protests in many U.S. cities and a raft of legal challenges amid confusion over its implementation. It has also raised worries about the potentially destabilizing impact of Trump's policies. Trump always stated these were policies he would implement, said James Woods, global investment analyst at Rincon Securities in Sydney. Quite a lot of it was brushed off as campaign rhetoric, but he is following through. This renews concerns about a trade war with China that would significantly affect both Asian and the global economy, Woods said. The biggest threat to markets at the moment is that Trump continues down the path of protectionism without focusing on economic policies. MSCI's broadest index of Asia-Pacific shares outside Japan lost 0.4% in holiday-themed trade. Australian shares closed down 0.9%, while New Zealand ended the day 0.7% lower. Japan's Nikkei was down 0.5% for the day as demand for the safe haven yen weighed on exporters. Pointing to a weaker opening on Wall Street, S&P, Nasdaq and Dow Jones futures all pulled back around 0.2%. Trump's immigration orders have created legal uncertainty domestically and drawn criticism from abroad. Several countries, including long-standing American allies, criticized Trump's directive as discriminatory and divisive. U.S. judges in at least 5 states blocked federal authorities from enforcing Trump's executive order, but lawyers representing people affected said some authorities were unwilling on Sunday to follow the judge's rulings. Separately, a shooting in Canada on Sunday added to wider geopolitical concerns. 6 people were killed when a gunman opened fire at a Quebec City mosque during evening prayers, in what Canadian Prime Minister Justin Trudeau called a terrorist attack on Muslims. U.S. 10-year Treasury yields were last at 2.4752%, after falling to as low as 2.462% earlier and down from Friday's close of 2.481%. The dollar index, which tracks the greenback against a basket of trade-weighted peers, dipped about 0.2% to 100.34 in Asian trade, after touching the session low of 100.17. The dollar also weakened 0.4% to 114.6 yen on Monday, pulling away from a one-week high hit Friday. If price action is any guide, it would appear that Trump's new executive order regarding immigration signed over the weekend appears to have gone down less well with financial markets, as early weakness in the U.S. dollar and Asia stocks suggest that markets fear some significant economic blowback. Michael Hewson, chief market analyst at CMC Markets in London, wrote in a note. Adding to pressure on markets, data on Friday showed U.S. economic growth slowed more than expected in the fourth quarter, with gross domestic product rising at a 1.9% annual rate, below the 2.2% rise expected by economists and the 3.5% growth pace logged in the third quarter. Earnings disappointments also weighed, led by Chevron, whose quarterly profit missed expectations, and Starbucks, which trimmed its full-year revenue forecast. But the impact across Asia may be delayed, with China, Hong Kong, Taiwan, South Korea, Singapore, Malaysia and Vietnam shut on Monday for the Lunar New Year holidays. While U.S. policies and data are causing some nervousness, investors in Asia will focus on the Bank of Japan's policy meeting on Tuesday, as well as manufacturing and services activity surveys out of China on Wednesday. Markets will also be watching U.S. inflation data later on Monday, manufacturing data and the Federal Reserve meeting's outcome on Thursday, and Friday's non-farm payrolls figure. In commodities markets, oil started the week on a negative note, extending declines on signs of growing output in the U.S. that looks set to offset supply cuts by the Organization of Petroleum Exporting Countries and other producers. U.S. crude retreated 0.45% to $52.93 a barrel, adding to Friday's 1.1% slide. Global benchmark Brent crude also dropped 0.45% to $55.27, after losing 1.3% on Friday. Gold shone amid the pullback in risk markets, but paired gains. Spot gold added 0.1% to $1,192.66 an ounce.